Hello. Thank you so much for your time. Please allow me to introduce myself. My name is Margie Finley Means, and I am a certified public accountant. I am also certified in human resources. I have over 20 years financial accounting and reporting experience in public, private, and not-for-profit entities. Included in those 20 years is 8 years managerial experience in human resources and payroll management. My education, it includes a Bachelor of Arts with a double major in accounting and business. I have my master's degree. My master's is business administration with 18 hours graduate level accounting, which is a requirement of SACS in order to teach college level accounting in Georgia. In addition to my professional work experience, my husband and we have been self-employed since 1990. We own and operate a national franchise. We have 6 northern counties in northeast Georgia. I've also had the great opportunity to serve as an adjunct instructor, initially at North Georgia Technical College in Clarksville, Georgia. That was 2006 through 2013. During those 7 years, I taught financial accounting 1, 2, and 3, personal finance, managerial accounting, QuickBooks, and payroll tax accounting. I have recently, in January of 2018, joined the college at Lanier Tech, or my colleagues at Lanier Tech, also as an adjunct instructor. I am very thankful to be back in the classroom. I am teaching financial accounting 1, 2, and 3, managerial accounting, and payroll accounting. I have also had, during the tax season of 2018, the opportunity to join the staff at TurboTax as a remote position. This is tax advice during tax season only during 2018. This is a call center. We are able to assist customers to navigate the TurboTax platform and assist with personal tax questions. So to set our foundation for the double entry accounting system, we need to learn the accounting equation. The accounting equation is assets equals liabilities plus owner's equity. Okay? It represents the relationship between a company's assets, liabilities, and owner's equity. Assets are known as what the company owns. Okay? Liability is what the company owes. Okay? Owner's equity for us at this point in time is going to be our investment less any withdrawals. So owner's equity is the rights of the owners to the assets after liabilities have been paid of the company. What are their rights? Assets less liabilities. So at this point in time, we're really just going to say owner's equity is our investment less any drawings or draws that they take out, the owners do. But we'll get into more of this in just a few minutes and we'll quantify lots of these problems. So if we look at the accounting equation must always be in balance. If we look at assets, assets are economic resources owned by the company. Examples: cash, accounts receivable, equipment. Assets have a natural debit balance. So here's a T account right here. This one is called cash. Cash has a natural debit balance. I highlighted it in yellow, natural debit balance. Okay, if you debit a cash account or an asset account, you will increase the account balance. If you credit an asset account, meaning this cash account, you will decrease the account balance. Okay? Using a T account, the accounting equation, assets have a natural debit balance. Your accounting equation must always be in balance. Okay? We're going to use 2 accounts. The first one is possibly an asset. If you increase, you're going to debit. If you decrease, you're going to credit. Okay? Looking at liabilities, our accounting equation must always be in balance. Our liabilities is the financial obligation that we owe to other parties, vendors, the bank. Such things might, or examples might be accounts payable, wages payable, notes payable. Thousands of different companies have different, liabilities listed. They're not all going to be the same. It's going to be particular to what this business has, the industry is, what they want to track, how they want to record transactions. Okay? Liabilities have a natural credit balance. Here is a T account. Again, this one is going to be accounts payable, has a natural credit balance. If you credit, meaning the right side of your T account, you're going to increase a liability account. If you debit a liability account, you will decrease your account balance. Okay? Next is owner's equity. These are your owner's claims to company assets after all company liabilities have been paid. For us, we're going to pretty much stick with this is an investment by the owner. Okay, so our capital account has a natural credit balance. Increase if you credit, decrease if you debit. Okay, so using the T accounts for liabilities and owner's equity, they have a natural credit balance. Debits decrease, which is the left side of your T account. Credits increase, which is the right side of your T account. So, other receivables is on the top of page 417. These are interest receivable, taxes receivable. So these are just different things that we incur as we go through as business operations or business transactions. They're just not part of our selling or merchandise and or services that we provide. They're still going to be put on our balance sheet. We're still going to report them separately. They will be considered current assets. Typically, you won't have any of these for over a year. You're not going to book it, and it's not going to be something that is over a year in term or life. So it's usually 1 year or less, and they're classified as current. It's not to say that they couldn't be classified as non-current. It's just unusual. So it depends on the circumstance. It depends on the industry that the business is operating in, and what how this arose. So it can be current or non-current. Typically, you see them as current only. Okay, so we know about our receivables. We know that in our businesses, we're going to have receivables that we're just not going to collect. Every business has it. So what do we do with some of those? So that's what we're going to have in this particular chapter. How are we going to decipher that? How are we going to record it on our books? So that was just kind of an example. If you did factor your AR, if you did shift the risk, this would be kind of what your books look like. You would go ahead and get the $850 that you might be waiting for, even though you sacrificed the fee here. It's just giving you faster cash flow. Questions? Doing business, but it does speed up your cash flow for you.
So with this type of journaling, go into what type of account? What type of account?
Well, these are all your
liability.
Accounts. These are all your different accounts. These are all new accounts that you would have if you did factor, like just a very high level sample of what Penny's and or Macy's has on their balance sheet. So it depends. If this is a liability, it would have a credit balance. But this is this account would shift, just like your over and short cash account for petty cash that we were doing in the last chapter. Depends on if it's credit, it's liability. If it's debit, it's an asset. That we're going to use, or we're going to look at in this chapter, is the direct write-off method. We're only going to write it off when we know it is worthless. Okay, so these are used by small companies. They're used when their receivables are minimal or immaterial. Not immaterial to them, but immaterial to the larger company, and how they need to what method they need to use, because the allowance method is GAAP. So it's in compliance with GAAP or accordance with GAAP. So that's what the larger companies use. Most companies use the allowance method. Some of the smaller ones use the direct write-off method. Hi. So, in closing, and trying not to take up any more of your time, I look forward to meeting you. I hope that I can discuss my background and my credentials with you in greater detail. I just hope that I was able to demonstrate in a very sincere manner my enthusiasm to continue to teach. And I love being in the classroom. I want the opportunity to explore other options in order to interact and network with people, whether it's seminars or whether it's a combination of seminars and online courses. I just really want to continue to grow and improve myself. And I do that through my interaction with my students and my colleagues. And that is how I want to continue to go forward in my career. I look very forward to meeting you. Thank you so much again for your time.